if you're thinking about buying in the next few weeks, the next few months, or whenever the one that you think is the perfect one or in the perfect location hits the market. This is Darla, I'm a realtor from South Louisiana, serving all of Acadiana and anywhere else in Louisiana that you're looking to buy or sell. Really, I'll travel just about anywhere for the right client. So these are some things that you absolutely need to do and some things that you shouldn't be doing if you want to buy anytime soon. You cannot be over prepared, especially if you're looking for a home in a very specific area. If you're looking for a home in a very specific area where there are just not lots of houses listed, not lots of houses that ever go for sale, you want to have an advantage on any other buyer. So what you want to do is you want to get your credit score as high as humanly possible. And that means you want to save money. You want to spend less. You don't want to cancel any credit cards that you currently have, but you do want to pay on them regularly. You want to pay your bills regularly. You don't want to finance anything major like furniture or a boat or a vehicle or anything else that would require a large payment each month. You got to remember this. When you're looking to buy, lenders are looking at a couple of things. Your debt to income ratio, which means how much money do you have coming in from income each month, and how much money are you sending out in bills and payments and things like that. And that's called your debt to income ratio. So you want to have that, you want that to be a good score. And so the more money you make and the less money you spend, of course, your score is going to be higher. And that's going to make your credit score go higher. You don't want to open, let's just say you already have 2 or 3 credit cards and you're using them regularly. There's no reason to open another one and have even more debt. But lenders always say, if you have multiple credit cards and let's say you have one that you haven't used in a while, they say don't cancel it. Because it keeps credit history for you. So if you paid on it regularly, let's just say, like me, for example, I've had a Discover card. Lord, I got it my first semester in college, which was 1994, a Discover card. I very seldom use that Discover card anymore. I actually had the Discover card in college because I had to pay for all of my college. And so I actually had the Discover card to pay my rent, to pay for food, to pay for bills, to basically to live on. But then later in life, of course, I didn't need it to live on. So I hardly ever used that Discover card. And thankfully, I never canceled the Discover card. So I still have it. It still shows a credit history and I never canceled it. So if you have a credit card you've had for a long time, and even if you hardly ever use it, you don't want to cancel it because that's a line of credit for you if you're looking to buy a house anytime soon. So remember, the less you spend and the more you make and the more you can save, the better. Not because you need a substantial down payment, but because it looks good for your credit. So a huge misconception that people have when they're thinking about buying a house is that you need 20% down to buy a house. If you go to a local bank, you do need 20% down. I do not recommend going to a local bank because most of the time they do not have the best interest rates, they do not have the best terms, and they do require 20% down, which most people just do not have. So a mortgage broker or a local lender can shop around all the rates for you. They usually work nights and weekends and after hours, and you can text them and you can ask them all your questions. Unlike a person that works at a bank, they're there during banking hours. And so that's a huge advantage too. So when you're thinking about buying, the number one thing I would say to do after you work on your credit, get your credit score as high as you can, save some money, those kinds of things. You want to choose your realtor. That is crucial. You want to choose a realtor who you know closes lots and lots and lots of transactions. So that's not your nanny, that's not your neighbor, that's not your friend. This is business. And a lot of people say, well, you know, I have to use this realtor because they're related to me, or I have to use this realtor because they're a friend. Listen, Business is totally different from friends and family. Choosing the right realtor who closes lots and lots and lots of deals could potentially save you tens of thousands of dollars, and that's whether you're a buyer or a seller. You want to choose a realtor who you know closes lots and lots and lots of transactions, not someone that just looks busy, but someone that's actually proving that they can get deals done. A monkey can get something under contract. A monkey can put a for sale sign in a front yard. Getting it from contract all the way to the closing table where it sells is a whole different ballgame. So choose your realtor wisely. Look them up on Google. See how many reviews they have. See how many positive reviews they have. Look them up on Zillow. Look them up on Realtor.com. Look them up. Just like you were choosing someone to do your taxes, or someone to feel your teeth, or someone to do surgery on you, do some research. And referrals are huge. So if somebody refers you to a realtor and they have a good story about why they're a great realtor, listen, people will only refer people who have done a great job for them. So if somebody refers you a realtor, that's usually a good thing. If somebody says, yeah, they were okay, listen, run. Because there are thousands of realtors. You want a realtor who someone says they're dynamic, they're energetic, they're a go-getter, they're proactive, they're not into all the drama that can happen behind the scenes with real estate. You want to choose your realtor wisely, and then that realtor is going to say, these are some mortgage brokers, or these are some amazing lenders who have the lowest rates, the best terms, and they're going to say you need to get pre-approved so that you know, number one, your loan type, number two, what is your budget. So decide what monthly note per month do you feel comfortable paying as a house note, knowing that your house note, your mortgage, is going to include the note for the house, the insurance, and if that's flood insurance and house insurance, those two things, and your taxes are all going to go into that note. So all of those things. So knowing that your taxes, your insurance, and your house note are one note, know whoever you're buying the house with. If you're buying it by yourself, then you get to decide what your max note is going to be. If you're buying it with a fiance or a husband or a wife or whatever the case may be, know what is the absolute most you want to pay in a note each month, all right? And so let's just say that note is $1,500. When that realtor gives you a mortgage broker or a lender to call, you're going to say to them, do not pre-approve me for the maximum amount that I can get pre-approved for. Pre-approve me for whatever number is equal to this note. So if your note is going to be $1,500 a month, say to that lender or that mortgage broker, the most I want to pay with taxes, insurance, and my house note is $1,500 a month. Or is it $2,000 a month? Or is it $3,000? Whatever that number is, say to them, this is the maximum amount I want to get pre-approved for. Because if your house note, let's say, is $1,000, and they pre-approve you for way more than that, then you're going to go start looking at houses that are way over the budget that you want to spend. And then when you do decide to go start looking at houses that are actually in your budget, those houses are not going to compare. Houses in the $300,000 range, down to the $250,000, down to $200,000, they all look different. And so the higher your number is, the better those houses are going to look. The worst thing you can do is go look at a whole bunch of fancy houses that are way out of your budget, and then when you have to really shop in your budget, those houses don't look good. They just don't look good. They're not comparable to those houses. So choose your realtor, choose someone you know, like, and trust that has an amazing reputation, that closes lots and lots and lots of transactions. Listen, the average realtor closes 3 to 5 deals a year. Okay? That's average. So say to the realtor that you want to use, how many deals did you close last month? How many did you close in the last 3 months? How many did you close last year? And if those numbers are low, you want to find someone else. Okay? So for example, my goal this year is to close 100 transactions. I'm on track to do so. Last year I closed 68 because I caught COVID mid-year, but I was on track to close 100. And the year before I closed 83. Okay? So I work my ass off for my buyers and my sellers. If you are my client, you are going to get top-notch treatment. and you're going to get the best of the best. That's a guarantee. So choose your realtor wisely. Have them refer you to some amazing mortgage brokers or lenders. You want them to give you 3, and then you want to choose who you feel the most comfortable with. Then once you're pre-approved, that realtor should show you anything, anywhere that's in your budget that you want to go see. But before you go see those houses, a great realtor should say, pick a few houses that you want to go look at, because I can show you anything, anywhere. And then what I would do is this. I would check the flood zone. I would see how old the roof is, how old the HVAC system is. Has there been any hurricane damage? Has it ever flooded? All those things that you want to know before you go waste your time looking. Because let's just say you find a beautiful home that is in your budget. It's been completely renovated, but it's 10 years old. The likelihood is one of the reasons it has been completely renovated, if it's less than 10 years old, is because it flooded. What other reason would a house that's 10 years old be renovated? Most likely it is taken in water in some recent storm. And so you then have to decide, is that even a house that I want to look at? If I know that this house is under 10 years old and it's already flooded once, what is the likelihood that it may very well flood again? And so those are some kinds of things to keep in mind before you go waste your time looking at all these houses. Let's talk about flood zones for a minute. So what a lot of people don't realize is that the whole state of Louisiana is in a flood zone, all right? The whole state. If you're in flood zone X, you're not required to have flood insurance, but it's still considered a flood zone. If you're in other flood zones with other letters, like A or AE or V, you are required to have flood insurance. So if you don't want to see any houses in zones that absolutely are mandatorily requiring flood insurance, then you need to say to your agent, listen, if I send you the address for a house that I want to go see, please tell me if it's in a zone that requires flood insurance, because I don't want to be in that zone and I don't want to pay flood insurance, right? So you can waste your time looking at houses that are in zone A, E, or V that do require flood insurance if you don't have a realtor that knows what they're doing. I list lots and lots and lots of houses, and I'm telling you, lots of them are in flood zones, and lots of times I'll get a purchase agreement from a realtor representing the buyer, and they'll submit the offer. And then, and only after it's under contract, does the realtor tell the buyers, hey, that house is in a flood zone. And then guess what? They cancel the contract. That was a total waste of everyone's time. So you want a realtor who does lots and lots and lots of research on the back end to save you a whole lot of time when you start house hunting. Someone that's going to do all that research for you, and let's say you send me 6 houses that you want to go look at, and half of them have had, maybe some of them have taken in water from a flood, some of them are in a flood zone. Listen, there are also plenty of houses that have had flood damage that are not in a zone that's required flood insurance. It's not considered a flood area, but it has absolutely taken in water before. Those are some things you have to hire a realtor for, who will do all that legwork for you ahead of time so you're not wasting time. All right? So choose your realtor wisely, work on your credit, save some money. Don't go out and purchase a new vehicle or a boat or anything like that if you're thinking about buying a house soon. And then get the ball rolling. Because especially if you're in a zone where lots of houses are not listed, you want a leg up and you want an advantage. So let's say tomorrow I list a beautiful home in an area that you are interested in. You've been waiting for one to hit the market, okay? Let's just say this happens. And listen, I have lots of houses that are about to hit the market, so this is very likely. But let's say this is the house that you love. Well, it also may be the house that 3 other people love. And 2 of those people may have a pre-approval letter, so they can go see that house right away. They can submit an offer right away. In the meantime, you haven't gotten your pre-approval letter, and you have to now find a lender to get your pre-approval letter. That might take you a while. You are behind the game, and you may very well lose out on a house because you weren't proactive. So be proactive. Sometimes people say to me, I don't want to get pre-approved until I find a house. Listen, that's backwards. That's absolutely backwards. If you're afraid of your credit taking a hit because it's so low, then you probably shouldn't be house shopping. okay? If your credit score is so low that you believe that having a lender pull your credit for a house is going to hurt your credit, then work on getting your credit up so that then when they pull your credit, it's not going to make that much of a difference. Another question I get is, what if I got pre-approved a few months ago and it's now expired? That's okay, because getting a lender to re-evaluate your situation and get you an updated pre-approval letter is going to be fast, but you already know your budget. So you already have an idea of what it is, and so you're good to go, all right? Y'all have a great day. Reach out if you have any questions, and remember, there are no stupid questions. Ask your questions. It's the only way you're going to learn. Y'all take care.